Good afternoon, Scott Redler, T3 Live. It is Monday and it's time for today's recap. So a pretty non-eventful day, which is what I think a lot of people like myself would have liked. Some digestion, maybe even some downside action considering the size of the move that we've seen since that October 15th low. I know traders are still feeling some footsteps in the back of their heads because, if they got stopped out of longs when everyone said we were going down 20%, or even got involved when it looked like a great spot to put some risk on and then get out too early, or if they listened to everyone who said we had to retest the lows and tried to short when the market gave no clues, they might have got a little hurt there too. So, lots of traders probably a little beat up over the course of the past 2 weeks, whereas maybe a lot of investors at this time, they're looking at their statements and they're like, wow, I'm doing really good. I've been in the market for 40 years. I'm making a lot of money. I've been in the market for 30 years, making a lot of money. I've been in the market for 10 years, having a monthly plan, and they're doing all well, so they can do it that way. But for traders who trade for alpha and P&L, there's been that fine line on whether or not you're making money, losing big money, or even maybe making some big money if you held through and you just trailed with stops, which is something that we try and do, but it's not that easy when you go through the whole process. Look at the chart of the spiders here, and you will see, I talked about it in the morning call today. It felt a lot easier to take risk down when we broke the 8 and 21 day, maybe even get short when you broke the 50 day, then the red dog reversal here at 150 day to retest the 50 day to fail, to break this and break the 200 day into that. This felt pretty calculated, and it felt like it was, the market deserved it. And then into this, bottom tail, okay, you put volume in, by the way. The volume this day was unbelievable. Look at the size of the volume that day. Okay, people were bashing the market for having no volume on the bounce, but that's where the volume came in to cover shorts and perhaps get long. And then the next day, you had another high volume day closing off the lows, and that was your spot to switch some gears, at least cover some shorts and say, okay, let's see what type of rally we have. Next day we cleared the lower pivot, showing some commitment and follow-up through to these 2 days. And basically, if you got long here, a lot of guys like me probably trimmed a little bit too much on that day. Then you took out the 200 day, and then you had a lot of power into, the 21 day. Okay, and then finally, looked like we were going to get a rest, right? I remember I went out net short here. First time probably since the low that I went out pretty net short. And then the next day, it engulfed it. And was a little, just not a fun day to deal with if you were net short. But I think a lot of us had a third left on. But anyway, you go to the next day, held, showing you strength. That would have been a spot to say, I'm out of my shorts here because it's not working. And then lo and behold, you broke above the moving averages, and, look where we are now. So the question is, what happens here? By the way, look at the volume, and then I know the volume diminished during this rally up, but it was here where it counted, when to switch some gears. So you remove the volume one more time, and the question is, will this doji lead to a rest or sideways action? So usually what happens is, this is today's low. If we were to break below this, anyone who's kind of short this doji, showing a little bit of a slowdown in momentum, not a heck of a lot, considering look what happened here. Little doji, people thought the same thing, and then it took it out. So anyway, a slight doji, okay, and then here is this gap. Last 2 times you had gaps, they didn't even get close to getting filled. This one right here, didn't even get more than halfway, so it showed you strength at this level. This gap didn't get filled. The next day tested it, so it showed you strength at this level. And if you say up here, what does this mean? You know what? Strength at this level too. This didn't even have enough power to get down to here. And you know what? It didn't have enough power to do that even with oil breaking lower. You look at the USO here. The USO finally broke this area, broke 80. I think it went to 78 and change. And, people thought that if oil were going to break 80, I think every bear is hanging their hat that, oil's breaking 80, and then that'll give me a way out of me rolling up my shorts that I've been doing for a week and a half, ranting and raving on the bubble markets, and meanwhile being dead wrong. So now that we closed below 80, market didn't really, react to it. I was trying to talk to everyone in the VTF, thinking about, lately the pain trade has been the hardest trade. And after the market hanging tough with oil breaking 80, with the oscillators screaming overbought, the hard trade is to be short right now. And no, actually, the hard trade is to be long too, based on where we came from. So you have to just pick and choose what you want to do, because all these stocks have not been created equal. Real quickly, run through some sectors. You go to the OAHs that looked as if, maybe it had a mid-tier flag and then reversed pretty hard today. Some guys were saying that you should probably go home short this now because you had almost an outside day, closing the lows. And if a weak sector wants to continue lower, this looks like a pretty big, bear flag. Yes, it gave you a nice red dog reversal here, but stalled at the 21-day. So I didn't take it home short, but people are looking at that. I think that there's too much oil headline risk that, it's hard, but that's me. XLE also, pretty ugly candle here. This was a little stronger, but you now had a reversal, red dog reversal here where it traded above 87.52, closing the lows. So if you were looking for a short signal, instead of just using opinions, this was one, and it's still below the 200-day. We shall see. What did the Qs do today? The Qs, small little doji, still super duper strong, well above the old highs. Here was one gap that never got close to being tested, another gap sideways, and now another gap. Are they going to leave another gap unfilled? I always have a tough time when you're extended from the 8 and the 21. I like to be in portfolio approach when you're following it, but when you get extended from it and you stay with it with any type of size, chances are you do come back and touch it at some point. So the question is from where. So that could hurt as an active trader if you have too much stock on. So I still would be kind of light up here. That's why people like Red Dog, you haven't been in Apple since last Thursday. And it, upsets me a little bit. But, we had a nice trade. First of all, we trailed it and traded it very well, or at least, I could look at most of my year. A lot of it happened to be long Apple as it was, following the 8-day, and then every time it touched the 21-day, it gave you another little setup with the signal. But anyway, my last time I got in for a swing trade happened to be on earnings after hours, after the report, not into the report, around 101.50-ish, and then stayed with it, and I think I sold it somewhere around this 107-ish. So I missed the last 2 days, but it's very extended from the 8 and 21-day, and I know stocks extended can stay extended for a long time, but the hard part of selling something you want to own for higher prices at another time is selling it and then trying to get back in and paying higher prices and thinking you're chasing. So for me, I'll have to figure out a way to get back in it, and until then maybe I'll trade some intraday patterns on the 5-minute and I'll see what's going on. G-Pro, Sperling, really nice trade. You look at G-Pro, look at that move. Definitely had a lot of volatility, but these stocks trade. That's why you learn how they trade. Here's when you had your really nice pent-up move and a little flag. Followed the 8-day the entire way before shaking the tree a little bit here. So the next time it hit there, you knew you had to get out of the way, which was right there. And then even if you were out of this name, you watched the earnings gap. You didn't have to be in it for earnings. And then today went from negative to positive. You had one trade, intraday, another trade when it took out the earnings high, and now it looks like, at least it's back in play for us to trade. Tesla still has to report earnings, so it's still a little wishy-washy. I actually made my money this morning in my active account in Tesla when it cleared this area, but then ran out of gas, and I got lucky that once it came back below this, I got out of it, and now I'll wait and see. Earnings are until Wednesday. It still looks okay. It's just very choppy. It's going to need earnings to get a little cleaner. Some guys got caught in Mobileye, didn't trade it today. Still doesn't act so well. It's been very choppy. You have to be kind of perfect in this name or stay away from it ever since it broke the 21-day. It's been a very wishy-washy, especially after this small outside day up here. So I think you just have to wait till earnings. It's still a high valuation name, and there aren't that many of them that are being so pent up. I actually think tomorrow, I almost went home short Facebook and Twitter. I almost did it. I didn't do it though. But because I knew if they gapped up, it would irk me. It's one thing when I'm not in the market when it goes up, but if I'm caught short, it just doesn't sit well. So I know myself, and I didn't do it. But maybe there's a setup because this Facebook is getting interesting, more from the short side. Okay, I tried to talk myself through it today to take it home short. I didn't. I guess I'm a little bit of a skirt. But anyway, you look at this trend line. It's been intact for a long time. And then what does Facebook have now? What did it do today? Facebook has a big gap. Okay, a big gap that got unfilled, and it's now below all the moving averages. Right there, that shows you weakness. It was also near the highs. So it was near the highs, after a huge move, and now they're talking about how expenses are going to be a little high for a while. So you look at the move from this cup and handle pattern way back when we were talking about accumulating it for a major move, which already happened. Now you have to trade it. And you've had sometimes pull-ins to the 21-day. So It hasn't really broken this 21-day, so I guess you need to figure out if it's going to. But this little king and queens pattern where you have this breakout candle matched, and now you're at the bottom third, could spell some short-term trouble. And I know people call me a perma bull or glass half full. I don't like to be short or this and that, which I don't. But we'll see what happens tomorrow. Here is the 100-day. Today it was upgraded by Morgan Stanley with a $90 price target, and it went down. It was sold. The upgrade was sold. And now you have this area. So if we were to break this tomorrow, 72.80, maybe you test a trend down to 72 and maybe even, this lower pivot here. Okay. Twitter also doesn't look so great now. Twitter, it's below the 200-day. It's got a huge gap. It tried to reverse on earnings day. Next day got negated, and now it's almost back to this reactionary low. So see how this handles this tomorrow, but it's below every moving average. Okay. It's this trend, remember we talked about breaking right there, never got reclaimed. So I guess you have to tactically small, tiny longs or be shorted. If you like to be short names and you wanted to be short this thing, didn't give you really short signals this entire way up, and now it's giving you a bit of a short signal here. So so that's your trade. Go with it. Baba gave us a nice intraday trade. This was a nice day trade today, guys. And I typically don't like to trade stocks on the day that they're going to announce, even though it's tomorrow. But there was a nice setup. It showed morning strength. There was a good trade above 122, and then again above the all-time high of 167, went as high as 102.80, and then came off a little bit. I'm still in my call spread. We'll see what happens. Hopefully, if the report's good and solid and they come out with good guidance, it'll be fulfilled at 105. I almost took it off today just because it was I think it was close to a double, but I was like, you know what, I'll wait, or not a double, 100%. But at this point, I'm just going to let it work itself out. It's been a nice move. It was a nice swing trade for everyone who was bashing Alibaba, the blah, blah high, the this, the that. Once this happened, I'm like, guys, take notice. We could get a nice move here and follow the 8-day the entire way. And, we'll see what happens tomorrow with earnings. I'm in the call spread. If it's not good and they don't give guidance and Mr. Ma, talks about Forrest Gump a little too much, maybe we got to pull in and it'll be viable. And then I do think that this is not going to be the high of Alibaba. We shall see. What else? What else happened today? I think some of the Chinese names had a little strength. Beta, still stair-stepping higher. I think Sperling was in Leju, if that's the way you say it. Broke above this level. Something to do if you're looking for something to do. Some of the IPOs that we've been talking about that I always list in my morning note with levels still look okay. Cyber, it's working its way higher. I think we had it listed down here, when it broke out, and it's so far looking pretty good, above the moving averages. What did RWLK do today? Still having trouble, sustaining more than a trade. Tried to break out above this and failed. Still working its way higher, but it's just not that clean. What else were people looking at today? Loco, what'd you do? You probably failed. Yeah. Someone's like, oh, look at Loco again. I'm like, okay, so we're going to buy it high and sell it down like we've been doing every single time. So today I actually didn't touch it. But at some point, you would think it would clear this. But I guess we got to wait till earnings. Earnings, I think, are Thursday. And if they're really good and they show some growth, I have a feeling, that it's been under accumulation for this long, it could get going. So we might as well wait. There's been some micro trades, but it's just not easy. Gold, what did you do today? Inside day. Just, again, macro trends been lower and lower. Hopefully you've been listening to my morning call and listening to my note. I've been bashing gold and saying avoid. And, if you're good at shorting, this is signal 1 when it broke here, signal 2. This was actually one of my better trades of last year when it broke this short. And now, after a series of some lower highs and not reclaiming the 200-day, it's now below this. So, yes, it's definitely oversold and hard to sit short, but you would think at some point this thing's coming into 105. And silver, what are you doing? Same thing. Silver, look, it's been caught in this downtrend for a long time with not many opportunities along the way. This also broke its level right here. And now, I would say, though, it's getting interesting, silver. It does have some industrial uses, and it's probably getting just thrown out with gold. And at some point, we might get a trade, but I haven't tried it yet. It's just broken. We shall see. That's really it. It's Monday. I think that you don't have to be all in long or all in short. You could have some shorts, some longs. You could have some longs with a hedge. You could trade around positions, or you could be somewhat, risk down. I know some people on my desk came in flat today and they had one of their best days because there was things that transpired. They weren't stressed out by overnight gaps. So many different times these gaps have been so big that it stresses you out, so you miss your intraday opportunities. I know the pain trade has been fast and furious, and I know for myself I would have liked to make more money long, but I sold some things too early, and then I was just basically tactical. And you always look back and be like, wow, I could have done better, but at least we weren't stubborn shorts and had excessive losses, which I think some people got put out of the business or blew up their accounts or had their worst month when people were like high-fiving. You don't want to be that guy, or if you were, you don't want to be that guy again. And part of the blame probably is I know they didn't push your keyboards. There was a lot of influencers out there bashing this rally. Every 30 handles, and you know who they are. I don't name names. And that's it. Again, you still are in control of your keyboard. Don't blame anyone else for whatever transpired for you in October. It's a new month. It's November. If you started off tearing the right foot, keep it going. We have the elections tomorrow. We have ECB Thursday. We have jobs Friday. There's going to be a lot of movement. We're a little elevated. A little bit of sideways consolidation to a downward bias would go a long way. And let's just keep staying nimble and quick-footed or quick-feeted or something like that. And I'll see you tomorrow with Brittany.